Gold prices rising slightly on Wednesday. Will, is gold sell-off done for now?
I think, look, gold is trading a bit sideways at the moment in anticipation of the European meeting on Thursday, but nothing significant in terms of news right now in the market.
So is that going to be the catalyst?
I think the catalyst is still right now the Greek debt situation. I mean, already it seems like some of that information may be getting priced into the market. Investors anticipating some kind of deal to be done on Thursday or to be announced on Thursday, making way for a further bailout, which would be positive for the euro and perhaps positive for gold as well.
How long are we still expecting that correlation with the euro to really last? Because you could argue that longer term, the second bailout isn't going to solve all the problems in Greece.
I think that's exactly right, and it's a very good question. We've seen that correlation sort of oscillate over the last couple of years, and there are times when it breaks down and gold trades with the risk assets, i.e. with the euro, and there are times when it doesn't. I think the longer term story is that gold will return to its sort of natural state, which is to be more of a hedge against dollar movement rather than anything else, and will trade more as a currency rather than a risk asset.
What's going to change to get us there?
I think that some kind of resolution over the European situation. Also, I think the negative real interest rate policies that we've seen, particularly here in the US and Europe, that filtering into some kind of inflation event down the road.
Now, technically, the euro, if you look at the FXE, is coming into some resistance. So if we have the kind of buy the rumor, sell the news on the Greek debt deal, might we then expect a gold sell-off as well?
That is a possibility. And indeed, gold, of course, has had quite a significant run-up since the lows of Q4 2011.
And then in terms of inflows that you've noticed over the last 2 weeks, what do you think investors are saying about the Fed and their quote-unquote weak dollar policy?
Well, that's a very interesting question, because what we've observed at ETF Securities is we've actually seen the majority of inflows this year going into what we would term the white metals, so particularly platinum and palladium. The last time that happened was in 2010, where that was an environment where the metal prices did particularly well. It was largely on a rebound, of course, and people were a bit more optimistic about a quick recovery, a V-shaped recovery, if you will, from 2008.
Do you think that that's pricing in then some kind of QE3 from the Fed, or is it really now trading on better economic data in the US?
I think there's perhaps a little bit of the QE3, but fundamentally it's just the interest rate policy, particularly right now, the negative real interest rates that we're running here in the US, and the Fed effectively saying, look, we're going to keep rates like this until 2014, that underpins the hard asset story, because it encourages people to get out of cash and into your hard assets, equity market, other types of potentially growth assets.
And it seems like the hard assets of choice right now are platinum and palladium. Thanks so much, Will.